This is the Clear Money Talk podcast, offering up creative solutions for your retirement future through education, choice, transparency, and empathy. Now, your host, CEO and founder of Clear Financial Partners, Tim Claremont.
Hello. My name is Tim Claremont, CEO and founder of Clear Financial Partners. Welcome to Clear Money Talk. As always, I'm here with our co-host, Tyler Andrews.
Welcome, listeners, to Clear Money Talk. Tim, I like how you said Clear Money Talk that. You said Clear Money Talk.
I try to emphasize the clarity,
Yeah,
That's
you
good,
made it very clear, which we appreciate.
I'm glad.
Yeah.
As did you, I would say. We should see how many times
Enunciation's
we can say clear.
important. I hate when people don't enunciate and you're like, one more time, say that again, And I hate repeating myself personally. And I know that Tim doesn't like to repeat himself either. So
I don't mind saying the same thing over and over again to clients because they don't have to remember it the same way we remember it. But yeah, it's important, I think, to enunciate. So I hope that you're all having extreme clarity as you listen to us right now.
we're having fun.
Yeah,
we're having fun. It's maybe been a week or two since we've recorded a podcast.
Yeah.
So
and this
feels
is by
good
the
to be
time
back.
you're listening to this, it's almost Christmas time, right? I think it's like
Yes.
holiday season.
Holiday season's in full effect.
So Thanksgiving's already gone by for whoever's listening to this. It hasn't gone by for us as we're recording this. It's going to be coming up here shortly. But
it's weird to think about it that way.
I have no idea what we're going to talk about or what our question of the day is. So
I love that.
Walking in unprepared with Tyler ready to hit me with it, and we're just going to go into it and get some answers. So
okay,
what's the topic of the day,
Tyler?
All right,
topic of the day. What financial strategies are available for freelancers and gig economy workers?
Ooh, what financial strategies are available for freelancers and gig economy workers?
So
okay.
Maybe we should start off and talk about what does gig economy mean? I didn't know exactly what it meant. I had ideas what I thought it meant, but gig economy is essentially you're hiring people in a contracting 1099 sort of role. We're up here in the Pacific Northwest. Nike is very well renowned for hiring people, not salaried or W-2 employees, but more so as contractual agreements for a short period of time. So they have more irregular incomes because they're sometimes hopping between contracting jobs, every so often. And then obviously freelancers are, people that, work for themselves. They have their own company, they're running their own shop, whatever that is that they might be doing. And with all of that, it becomes a question of how do you plan for those types of clients and those types of people, or if you're a listener and you fall into one of those categories, how do you plan for yourself, to budget, save, and to also invest and prepare for your future, especially because usually those types of roles come with irregular incomes. So it's a niche strategy and different approach to investing opposed to people that are salary that have very consistent type of incomes. It's a little bit easier to plan in those regards. So Tim, now that you've got the gist of it, what do you think? Where's your head going? I'm curious.
So I appreciate you continuing to give that explanation, giving me time to think as I was noodling on the answers to this. Actually, it's funny because the phrase gig economy reminds me of, when I was a kid, growing up, when you think about musicians, they want to get a gig. They're always trying to go get a gig, and a musician, when they go get a gig, it's they're only getting paid for that night. A lot of times not getting paid very much, as it's one of the challenges of that situation. And I think the gig economy is along those same lines. It's all of these people that are getting a gig, whether it's for one night or 1 week or several months or with an indeterminate amount of time frame because they're on contract. It just creates that level of uncertainty. How much income are you going to have and how long are you going to have it for in that gig economy environment? And also that self-employment element. You're basically self-employed. You're running your own business. You happen to be possibly the only employee of that business. And so you have the revenue coming in, but you're many times taxed just like a self-employed business owner that's running your own business. And because of that, you have to pay attention to that. I'd say one of the biggest mistakes I've seen people make in this gig economy environment is not adequately setting aside money for taxes, income taxes and payroll taxes. When you're self-employed, it's called self-employment tax, and self-employment tax is going to kick in. When you're an employee, your Social Security taxes are 6.2% of your income, and then your Medicare tax is 1.45% of your income, and you pay that as an employee. It's deducted from your paychecks, so 7.65% is deducted from your paychecks. But what you may not realize or think about is your employer, when you're an employee, is also matching that. They're also paying 6.2% for Social Security, and they're also paying 1.45% of your wages for Medicare. So the total amount of tax for Social Security and Medicare taxes is actually 15.3% that's being paid for you. You're just paying half as an employee, and then your employer pays half as an employer. Well, if you're self-employed, guess what? You're the employee and the employer. So self-employment tax comes in and takes 15.3% off the top. That's before income taxes. So first you get to pay the 15.3%, and then in addition to that, you have to pay your income taxes. And if you're in a state like Oregon or California, it could be 9 or 10% in state income taxes, in addition to the federal income taxes. So taxes are one of the biggest mistakes I see people make in the gig economy world, because they don't set aside enough money for taxes. And you want to make sure that you're also tracking your expenses well enough, because the taxable portion of your income is really related to your net profit. So your gross revenue comes in as a business owner in the gig economy, and then if you have any expenses that aren't reimbursed or aren't paid for by the person who you got the gig through, then that becomes an expense that you get to subtract from your gross income before you calculate your tax consequences. And that's something to make sure you're tracking your receipts and all of the expenses that you have that are legally deductible, so that you can shrink the taxable portion of your income and therefore minimize your taxes to wherever is legally minimal. So that's
awesome.
Just off the top of my head as far as one of the biggest mistakes I see people make in this gig economy environment. But to address what you're talking about, Tyler, as far as how do you handle budgeting in this uncertain environment with income? How do you handle saving for retirement? How do you handle? You might be struggling. I'm thinking of my son right now. So my son Marshall is in Southern California, and
if you're watching, Marshall, hey,
if you see this, Marshall, we love you, man. He's in the gig economy. He is surviving as a still photographer at this time, and moving towards trying to become a movie director. And I'm so excited to see him, create his first movie, and as that comes out. But right now, it's very much a gig economy. Working behind the scenes on various TV series or movies, taking photographs, and each one of those gigs is providing enough revenue for him to support his lifestyle. And so I'm just grateful that he's able to make ends meet. I would imagine that in this first couple of years of his involvement in the gig economy environment, it's not real easy to find money to save. Depending on where your level of success is in the gig economy, you may not have a whole lot of money to save. But one of the first places that I encourage Marshall to save, and that I would encourage you to consider saving in, is a Roth IRA. I think a Roth IRA is an excellent account for you to invest in, whether you use a savings account Roth IRA at a bank or an investment Roth IRA account, depending on your risk tolerance. The point of a Roth IRA is that all of your contributions go in after taxes. You're probably in a relatively low tax bracket if you're just getting started in the gig economy, because your net income may not be very high yet. And if you are at a lower income level, it's a good time to go ahead and pay your taxes now, and then never have to pay taxes on that money later on in the Roth IRA. And that's one of the benefits of the Roth IRA. The other benefit, though, and this is key, is everything you contribute to a Roth IRA, you can withdraw anytime without tax consequences. Now, the earnings on whatever you contribute to the Roth IRA are tied up until you're 59 and a half years old. And if you take the earnings out, you're going to be subject to a 10% penalty tax plus ordinary income taxes if you take it out before you're 59 and a half for an unqualified distribution. Anyway, point is, though, if you have $6,000, $7,000 a year, you can set aside in a Roth IRA. You do that for a few years. Maybe you've built up theoretically $18,000 to $20,000 in contributions. Maybe the account's worth $30,000 hypothetically if it grew that much. I'm not saying it's going to grow that much. We have no idea what kind of rate of return you'll actually get. But for illustrative purposes, let's say you've got $20,000 of your money in there and $10,000 of earnings, just to make it easy to understand. That $20,000 you could take out anytime you want, tax-free. The $10,000 you'd need to leave in there and try not to touch it. But after 59 and a half, that too could come out tax-free, which is pretty powerful. So a Roth IRA is a good tool. And when you want some tax deductions, if you're at a higher level of income, setting up your own 401k is actually not nearly as cost-effective or cumbersome as you'd think. And that can give you a much, much bigger tax write-off to the tune of $23,000 this year.
$23,000 if you're under the age of 50. If you're over the age of 50, $30,500 with the catch-up contribution provision that exists. So I'm happy you brought up the Roth IRA, and I think a key point to the Roth IRA is the flexibility that comes along with it, especially for the topic today, gig economy workers and freelancers. Being able to withdraw your contributions gives a lot of flexibility to uncertainty in your career field where your income might be irregular, as we've been talking about. So that helps, knowing that you can at least withdraw your contributions if something happens and you need to in that situation. So that's great. And that provides some structure, which I was hoping to touch on, Tim, in the podcast, is yes, we're talking about financial strategies and how to set those up and what might make sense for freelancers and gig economy workers. But is there anything you need to do before, considering investing, especially given the irregular of the income in your situation? I was thinking something like a sinking fund might be a good idea for somebody to have, not only to pay the taxes that Tim was talking about earlier, to have money set aside for that provision, but also in months maybe where you have no income because you have no job or you're not on a contract, or if your income on a new gig or a new freelance project that you're working on is not the same level of income that you need it to be to cover all of your basic expenses like rent, food, shelter, taxes, your Netflix subscription, whatever it might be. If you subscribe to Clear Money Talk, we don't charge for it right now, but maybe we'll change that in the future, and you'd want to consider subscribing and paying for that.
It'll probably be free forever.
It'd probably be free forever. But all these things and being able to dip into that sinking fund for those purposes might be a nice first place to go before you consider investing. But I like that you mentioned the Roth IRA, because even if you didn't have those things set up, knowing that you could get your contributions out is a huge value add, I think, for a lot of people that most people don't realize.
Yeah, no, you're spot on. Before investing for the future, I would make sure that your present expenses are taken care of. And in a gig economy environment, thinking about exactly those necessities that Tyler just articulated, looking at those on a month-by-month basis. And I would say this is one of the examples where I would make a recommendation to say your emergency fund, your sinking fund that Tyler was referring to, should probably have at least 6 months of those expenses in it before you start thinking about tying things up in long-term savings locations. If your gig economy environment is so varied in terms of your employability, if you're not if you're on a long-term contract with a company and you're technically a part of the gig economy, maybe you don't have to be quite as concerned if you have some stability of income, or you have a much higher income level, or you've been doing this for a long time, so you understand where things are at. But if you're newer to the gig economy, make sure you build up that emergency fund, that sinking fund Tyler's talking about, to cover you in those down months, because it is. Yeah. There are going to be some down months, and it's not easy, and you got to be able to cover those expenses and not get into debt, not get behind the 8 ball. The Roth IRA comment that I was making, however, one other point I'd like to point out, look at and Google this, or go to Perplexity or any other AI searching tool or whatever, but look at the Savers tax credit that's available in the United States. Your net income may be so low in your early years in the gig economy or in the freelance world that you might be eligible for a Savers tax credit. And by contributing into the Roth IRA, you may actually get a significant savings right back in terms of a refund on your taxes for those contributions. And your income has to be very low to qualify for the Savers tax credit, but your net income might be low in these years where you're building up with that gig economy and that freelance environment. So just see if your income qualifies you for that Savers tax credit. If it does, don't miss out on contributing that money to the Roth IRA to get that credit.
Yep.
And then, as far as the sinking fund, the emergency fund, I think that's really good advice.
Yeah, it just gives you more comfortability to be able to invest and think more long-term with those goals. Now, that brings up another good point. How do you save when you have irregular income? It's, when you have a 401k through your employer, as an example, your employer and payroll automatically withholds every paycheck, whatever amount you designated into the 401k. Makes it easy for you. When you don't have that simplicity because your income is fluctuating drastically between months, as an example, in a worst-case scenario, how do you save? And as Tim's been talking, as we're going through this podcast, I was like, setting up an annualized goal for investing might be a good place to start. And we often talk about that with our clients too, is when you have irregular income, it's more about, okay, how much do we want to save this year? And then let's make that our goal. And then let's try to achieve that by year end. And that might mean saving sporadically when you have great months and saving less when you don't have as good of months or you don't have the income to save in those months. But trying to get to that year end goal, that total investable amount that you want to get to by the year end, is a great way to approach it. So that way you're not feeling defeated in months where you don't invest maybe what you were investing in previous months. But as long as you're looking long term at that total goal for the year, I think that's a great place to start.
Yeah.
And then it's asking the question, okay, I had this goal. Where's the best place to put that money? Is it the Roth IRA? Is it a 401k that I could set up for myself if I'm a sole proprietorship, single business owner type role? Is it a brokerage account? And then you can figure that out from there based on your unique situation.
That's right. No, you're spot on. I think the annual goal is a good starting place as far as figuring out how much you want to save when you look at your anticipated income for the year, and then how you're going to meet it. And you can meet it by doing maybe a little bit every month, maybe having a quarterly target. and then an annual target. And any one of those or all of them can be used to achieve your annual goal. So maybe you can handle a little bit every month, and you know at the end of the year you're going to hit X. Like, for example, let's say your annual goal was $20,000. So you wanted to save that much for, longer term investing for down the road. And you feel like you could probably handle, maybe $500 a month. And so if you could do $500 a month, you're $6,000 right there. If you just do $500 a month every month, no matter what, you make that like a mortgage payment or like a rent payment, then you're going to be at $6,000 at the end of the year. You still have another $14,000 you wanted to hit. So you could divide that $14,000 by quarters. If you have, kind of a quarterly objective, when you have a really good week or a good month or a particularly successful gig, you can try chipping away at that quarterly objective. And if you divide the $14,000 into quarters, it's another $3,500 a quarter. So maybe you do $500 a month plus $3,500 a quarter whenever you have a successful moment, and you'll make it there. Now, maybe that doesn't work for you. Maybe you have a big annual moment that's going to be successful. That's fine. Maybe instead of an extra $1,000 a quarter gets you an extra $4,000 a year plus the $500 a month. Now you're at $10,000, and then maybe $10,000 once a year randomly when you have some kind of annual windfall that comes in that you might see a big opportunity pop in. That'll take you up to the $20,000. There's lots of different ways to solve this math problem, but that's all it is. It's just a math problem. So just think about it and say, what do I want to save, and how am I going to get there, and have a strategy, and hold yourself accountable for that strategy.
I like it. Any other thoughts?
Let's see. So the gig economy, freelance economy. I guess the last piece is I'm noodling on what we discussed. Recognize if you are particularly successful in this gig economy, this freelance economy, there are always more places to go. That first salary deducted contribution into a 401k kind of scenario for yourselves, or as a sole proprietor, that $23,000 or that $30,500 limit, if you're 50 years old or older, is just the start with 401ks. You can also do a profit sharing contribution up to 25% of your net Schedule C earnings minus 1/2 of self-employment, if that's the way it works for you. Or if you're a W-2 employee, in other words, you can create your own S corporation potentially for your business and look at having wages on that. You could potentially do the salary reducted $23,000 or $30,500 plus do another 25% of your overall W-2 wages. I mean, there's room to put more money away if you have the extra success coming in and in a tax advantaged capacity. And if you're a really high net worth income earner in the gig economy and the freelance economy, let's say $300,000, $500,000, $1 million a year, there are a lot of additional really cool tax strategies and investment strategies that we can bring into play. Just depends on where you fit in the spectrum.
Yeah. You often use the champagne tower analogy. Yeah. There's, you start at the top, there's always more glasses.
That's right.
And if there isn't, we'll just add another row of glasses down there. We'll figure it out.
The infinite champagne tower.
It is. It's really cool. It's really cool.
That's good. Analogies are helpful.
Yeah. Should we do just the answer?
Yeah, sure. Let's do it.
Okay.
Just the answer.
Let me rephrase the topic. What financial strategies are available for freelancers and gig economy workers? And Tim's going to do just the answer for us.
All right. Delegated. So what financial strategies are available for freelance and gig economy workers? Yep. And in summation, be careful to make sure you're covering your tax consequences. Think about both self-employment tax and state and federal income taxes. All of them will be applied to your net earnings. Track your expenses successfully, thoroughly with receipts and documentation so that you can keep your taxes at the legal minimum so that you can, take advantage of all the tax deductions that are available to you. Again, we're not accountants. We're not giving tax advice. We're just talking to you about tracking your stuff and work together with your tax professional to optimize your tax situation. Consider the possibility of building a significant sinking fund or emergency fund account so that you have enough money for emergencies, especially if your income is erratic in this gig economy environment. Make sure that you have probably at least 6 months of living expenses set aside. If your income is a little bit more stable or you're in a long-term contract that you're pretty confident about the stability of your income, you can adjust that as you see fit. And then if you want to start saving, think about a Roth IRA because you can access the contributions to a Roth IRA anytime tax-free. It's only the earnings that are tied up until 59.5 with a 10% penalty tax if you touch them. And if you want to save more, consider a self-employed or solo K, a single 401k where you can have your own 401k contribute up to $23,000 a year as a salary deducted portion. If you're 50 years old or older, $30,500 per year. This is in 2024. The numbers are probably going to go up a little bit here in 2025 and each year hereafter. Mm-hmm. And then in addition to that, if you still have enough success that you can do even more, there's a profit sharing contribution you can make for yourself. Work together with a financial professional that can help you deal with the right way to invest all of these assets, open the accounts for you, and a tax professional that'll help you make sure you're optimizing your taxes and dotting the I's, crossing the T's in the process. And if, just keep hammering at it. I wish you well in this gig economy and freelance world. It's not for everybody, especially if you have some significant variability in your income. So if you got the right makeup for that, the right genetic makeup, charisma, attitude, lifestyle approach for it, and it's working for you, kudos. Just make sure you don't neglect the money part. Nobody else is going to take care of it for you.
That's right. Yeah. And these, I feel like these roles are becoming more and more prevalent every year that goes by. I mean, back probably when you were a teenager, it probably was a lot less common, right? Freelancers and especially gig economy, contract 1099 type of work.
Yep.
It's becoming more and more prevalent as companies are like, wait, we don't have to have full-time salaried people. We just need to hire them for a portion of time to get some stuff done. And it actually saves us on our bottom line. So, and there's pros and cons to obviously all that. So thanks for doing the just answer. That was awesome. And that naturally leads us to, do you guys want to guess? Trivia.
Trivia. Here we go.
Okay.
All right. What do you got for us?
Okay. So Tim, myself, and our better three quarters, Crystal and Olivia, we choose shows that we alternate watching between the four of us. It gives us exposure to shows that we like and, share that with others. And it's been fun. So we just finished Dexter, and that show's definitely not for everybody. But it was, Tim, was that your choice?
That was my pick. I'd heard good things and I'd never seen it before.
It was,
and, Crystal likes all that kind of true crime stuff sort of thing. Obviously it's not true crime, but anyway, yeah.
Yeah, anyway, so we just finished it. So I thought, let's wrap that show up with a trivia question about it.
Oh, wow. Okay. So to be fair, Crystal and I finished months ago. Tyler and Olivia were slacking. They've just finished it. So he's asking me something fresh for him. That's probably a little older for me. I've binged several other shows since then. So, all right. What do you got for
Tim,
me? What do you got?
You got this. Okay, question. What is the name of the boat Dexter uses in his excursions to sea?
Oh, my goodness.
And I have options if you would like, unless you will need to give us.
You don't get a lot of time on this because I know your attention span as you're listening to this or watching this is only so long as a viewer or listener. So I feel like given enough time, I would be able to come up with this. Man, but I think I'm going to need the multiple choices. I just can't remember off the top of my head.
You're going to know it as soon as you hear it. I'm going to know
it as soon as I hear the multiple choice. Okay. I know I am.
All right, here we go. Okay. Bay Harbor Breeze, Ocean Reaper.
Ocean Reaper.
Slice of Life. Dark Passenger.
Dark Passenger. Those are some really good choices. Slice of Life. I believe that is Slice of Life. And I don't think no matter how long I thought about that, I would have been able to pull that one out of my memory. So a good question. Thank you for that.
You're welcome.
That was fun. It was a fun show. I actually enjoyed it. There's some dark moments. Not all shows are for everybody, as Tyler said.
Not all shows are equal and the same. That's for sure.
Just like not all assets are taxed the same. Not all shows are for everyone.
And not all advisors are the same either. We do things very uniquely and personally here with all of our clients here at Clear Financial Partners. And if you think that Tim or I would be a great fit for you, don't hesitate. Reach out to us. You can give us a call, 503-579-1000. You can also look at our website, www.clearfp.com. And Tim, what's your big, hairy, audacious goal that we need to just continue to talk to people about? Because, we just need to keep telling people about
my BHAG. So after years of reflection and experience and thinking about what do I want to do next, what's the next mountain to climb, my big, hairy, audacious goal, our big, hairy, audacious goal together is to teach 1 billion people on this planet something smart about money. So if we are teaching you something smart about money, if you have learned anything smart about money from us, whether it's on this podcast or a previous podcast, please go to somethingsmartaboutmoney.com and get counted. We're counting you literally one person at a time, and we are climbing that mountain towards 1 billion and working hard at it.
I love it. Any wise words to wrap this up?
Final wise words.
Yeah.
Every business is the same. Expenses or revenue comes in and expenses go out, and the difference is profit. When you're in this gig economy world, recognize you are a business, and revenue comes in, expenses go out, and the difference is profit. Make sure you're paying attention to all three of those categories: your revenue, your expenses, and your profit. Too often I find people are only watching their revenue And if you're only watching the total gross revenue coming in and not paying attention to your expenses and your profit, you run the risk of really getting surprised, especially on that tax side of things. So there's my wise words for today on this topic. Thank you for joining us on Clear Money Talk.
Until next time. See you.
Investment advisory services are offered through Clear FP Advisors, LLC, or Registered Investment Advisor. Securities are offered through Clear FP Securities, LLC, member of FINRA IPC. Exposure to ideas and financial vehicles discussed should not be considered investment advice or a recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments may fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Timothy Claremont is licensed in your state, please contact his office. Clear FP Advisors, Clear FP Securities, and Clear FP Life LLC are not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide tax and/or legal advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Clear FP, LLC NPN number 194283777 and or Clear FP Securities NPN number 197499604. Any discussion of general investing strategies or specific securities are for conversational purposes only and should not be taken as a guaranteed endorsement or recommendation.